Welcome back to Satoshis Are Us. My name is Tim. Satoshis Are Us, where we bring you truth about money and about crypto. All videos here are purely for educational purposes. I'm not a financial advisor, nor is this video financial advice in any way, shape, or form. Before deciding what you want to do with your money and how you wish to invest, please do your own research. Today, we're going to be discussing money, as in fiat money, Bitcoin, and gold. Okay? We're going to analyze them, pull them apart. Unfortunately, there's a lot of misinformation, misunderstanding, and a bit of a lack of knowledge about how this all works. So we'll get straight into it here today. We asked respondents, what is the US dollar backed by? A recent survey was done, and it's pretty eye-opening, really. 29% of people said that the US dollar, they believe that the US dollar is backed by gold, 29% of people. 4% said that they believed that it was backed by oil. 5% said bonds. 7% said backed by nothing. 23% said they don't know. And just 30% stated that the US government backed the US dollar. Now, obviously, the 30% that said that the government backs the dollar is correct. I'd also argue that the 7% that said backed by nothing are also correct. In fact, I'd probably say that they are more correct. Now, let's have a look, though. Let's analyse it and see what it really is and how those governments do back the fiat money. What is fiat money, for a start? If you haven't heard of fiat money, that's your cash, your dollars, your cents that we all use on a day-to-day basis. It's what you get paid in fiat money. Fiat money is government issued currency. So the government issues it that is not backed by a physical commodity such as gold or silver. It is not backed by a physical commodity, right? Rather by government that issued it. The value of fiat money is derived from the relationship between supply and demand and the stability of the issuing government rather than the worth of a commodity backing it. Once upon a time, fiat money used to be backed by gold. You'd give the bank a certain amount of gold, and that way the bank could hold your gold and look after it, and they would give you a promissory note. Basically, that note would say that you had that much gold. That was how fiat money started, or that was how notes started, but that is no longer the case. That stopped in the early 1970s, and gold was no longer pegged to fiat money or the dollar. It's entirely backed by governments alone. Most modern paper currencies are fiat currencies, including the US dollar, the euro, and other major global currencies. So fiat money, a government-issued currency that is not backed by a physical commodity such as gold or silver, but rather by the government that issued it. Very simple and straightforward. Advantages and disadvantages of fiat money. Well, the advantages, it gives central banks greater control over the economy and over you as well. Is cost efficient to produce. There's no doubt about that. It's cheap to produce money, especially in vast quantities, and even cheaper when it's just done digitally through the issuance of bonds and such, which the government does. The government issues bonds, and people buy those bonds, and those bonds are basically an IOU, and it's debt. All right. That doesn't cost them anything to print. They just basically give the bonds out, and it's all done electronically. Provides governments with flexibility. The disadvantages of fiat money is it's not foolproof way to protect the economy, okay, because it relies on the decisions of the policymakers and people that control the money within the government. We have to trust them and make sure that they do the right thing by us, and if they don't, it could end up being disastrous. It creates opportunity for a bubble, and it provides a risk of inflation. Okay, this is the US debt clock. This is one of the things that I would point to suggest that perhaps we haven't made the greatest of decisions here by just creating debt and just building up on it, and just issuing more and more currency into the market, whether it be in physical notes or not, is irrelevant, whether it's digital through bonds and such. You can see in the USA, $34 trillion. That's 34,731,987,740,000, and it's continuing up at a dramatic rate. And that debt is higher than the US's GDP. The US GDP is only 28. That's economic output, $28 trillion. The debt is $6 trillion higher than the GDP. So that something has to be done about that. And I don't think the people that control the money in the government are having much luck with this at the moment. And we're really in a pickle. Some countries are doing better than others. China, they've got $14 trillion worth of debt. Their GDP is at $17 trillion. Japan is at $13 trillion worth of debt, but their GDP is only $4 trillion, and so on and so forth. It goes down through the list. You can see Australia's climbing up here as well with 1.198, just under $1.2 trillion worth of debt and a GDP of 1.8. The gap is closing here. Our debt is increasing dramatically every single day. You can see, if you just sit there and watch that, you can see how the debt is going faster than the GDP. So over time, we'll end up in the same position as the US and we'll have more debt than GDP unless something dramatic changes. Now, the thing is, with currency, right, we talk about intrinsic value. I'm not going to go into extrinsic value. I'm going to just talk about intrinsic value, right? And intrinsic value of something is said to be the value that the thing has in itself or for its own sake as such or in its own right, okay? Now, fiat money itself doesn't necessarily have any intrinsic value because the paper itself that it's printed on is worth zero, and all it is what's called legal tender rather than lawful money. If the system itself were to collapse and the financial system was to fall apart, you couldn't just take your note back into the bank or into the government and say, hey guys, can I have my gold back? Can I have some gold for this? They won't, it's worth nothing. So that paper becomes worth the paper that it's printed on, which is basically nothing. So fiat money itself has no real intrinsic value. It has instead a perceived value based on our collective trust in the governments. Now, if you have a look at gold, gold does have some form of intrinsic value. It has been revered throughout history. It's not just because of its shiny appearance or its ability to be molded into beautiful jewelry. Gold holds a deeper meaning and value that goes beyond its physical properties. In fact, the question of whether gold has intrinsic value is a topic that's intrigued economists, investors, and philosophers for centuries. So it's been around a long time. Gold's historical significance cannot be denied. From ancient civilizations to modern societies, gold's been used as a measure of wealth and power. Its scarcity and durability have made it a symbol of prestige and stability. But does this mean that gold inherently possesses value? Right? To answer this question, we must consider societal beliefs and market demand. All right? The perception of gold as a safe haven investment during times of economic uncertainty drives its demand in the market. This belief is deeply ingrained in our collective consciousness, influencing the price fluctuations of this precious metal. Furthermore, gold plays a crucial role in investment portfolios. Its unique properties make it an attractive diversification tool for investors looking to hedge against inflation and currency fluctuations. So basically, when people are a little scared that the currency is losing its value and its buying power, or if there's big economic turmoil, global turmoil in the world, a lot of people traditionally will jump their money across and buy gold to protect that money from losing its buying power. Okay. Now, gold is obviously does have some scarcity. There's no doubt about it, but the amount that can be mined is quite large, and there is still a lot in the ground that will be mined over the next however many years. So it's not completely inflation proof, but it is definitely been considered inflation proof, a store of value, a hedge against inflation, which is the debasement of currency. But what does the future hold for gold's value? Will it continue to be cherished by societies worldwide? Well, only time will tell, right? Because it is technically still speculative. All assets are in one way or another speculative. But it's very unlikely that that's going to change because people are always going to see value in it from jewelry and so on, decorations. Gold's allure persists because it represents freedom, freedom from financial instability and volatility. And that's what people want, freedom from financial instability and volatility. We want security. Right? In conclusion, while some may argue that gold's intrinsic value lies solely in our perception of it, which is a fairly reasonable argument, there is no denying its historical significance, physical properties, societal beliefs surrounding it, and its role in investment portfolios. So next time you see a glimmering piece of gold jewelry or hear about soaring prices on the market, remember that behind all that shimmer lies something much more profound, the desire for freedom, right? Now, that moves us into Bitcoin. Now, people say Bitcoin definitely has no intrinsic value. It's useless. It's a Ponzi scheme. Unfortunately, that is broadly spread on the internet, and it's a wide belief from people because Bitcoin's been given a bad rap since it was created 2009. And look, still, it's only 15 years since it's been created. So it's still in its early days, and it's very reasonable for people to think that way. But let's look at the facts. Let's look at what it actually is rather than just shooting it down and saying that it's a joke or we don't understand it and we don't want anything to do with it. Let's have a look at what it really is. So the thing is with Bitcoin, it's very unique in the sense that its characteristics mean that it can be both a commodity and a currency. Bitcoin demonstrates characteristics of both commodities and currencies, positioning itself as a unique hybrid asset in the financial landscape. Hybrid, right? So it's both a commodity and a currency. That's the hybrid part about it. So it's a digital commodity people call it digital gold. Bitcoin shares similarities with more traditional commodities like gold or oil because it has a limited supply with a predetermined maximum number of coins that can never be that can ever be mined. Okay, so when the creator of Bitcoin set up the protocol, he basically ensured that there is no way that anyone can ever mine more than 21 million bitcoins. No one can ever create more than 21 million bitcoins, which technically means that this digital commodity and currency is even more scarce than gold. Bitcoin scarcity creates a sense of value and can be seen as a store of wealth. It's the same with anything. Anything that's considered scarce is always going to be considered to be valuable. Additionally, Bitcoin's decentralized nature, the energy-intensive mining process contribute to its commodity-like attributes. So it's energy-intensive to mine gold, costs a lot of money to mine gold, takes a lot of effort, and just like with Bitcoin, in the early days, you could mine Bitcoin with a home PC. You could probably get 10 Bitcoins out a day in the first 4 to 8 years. But it was designed so that the mining rate slows. It's got a program inside it that says that every 4 years, the mining speed, the speed at which you can mine Bitcoin can be halved. And where we are at the moment, it's probably, I think the maximum amount of Bitcoin that can be mined in a day is about 450 Bitcoins. That used to be tens of thousands in a day, so it's dramatically reducing. And the full 21 million coins won't be mined until the year 2140, which is 116 years away. Now, additionally, so Bitcoin scarcity creates a sense of value and can be seen as a store of wealth. Additionally, Bitcoin's decentralized nature and the energy-intensive mining process, which we've discussed. Now, on top of this, the Commodity Futures Trading Commission, CFTC, in the US defined Bitcoin as a commodity in 2015. So it's actually been officially recognized as a commodity by the CFTC in 2015, something that probably not many people realize, but that obviously gives it a little bit of strength. It's not just some shadowy internet currency that people created for criminals. That's not why it was made. We're going to look at why it was made. Bitcoin also demonstrates currency-like features. Now, I wouldn't even say it's currency-like features. That is its main feature, is to be like a currency. It can be used as a medium of exchange for goods and services, enabling peer-to-peer, which means person-to-person, transactions globally. Bitcoin transactions are borderless, right, which means that they can be transferred to any country anywhere in the world if someone has a wallet. Quick, happens within minutes, and potentially more cost-effective compared to traditional payment systems with fewer intermediaries. In fact, zero intermediaries. Well, the only time you need an intermediary is if you want to buy some and you need to go and get it from an exchange. But once you've got that Bitcoin in your wallet and you want to transact with it, you don't need an intermediary. What's more, Bitcoin's decentralized nature provides users with a high degree of financial autonomy and privacy, right? You don't have banks looking into what you're doing. You don't have governments necessarily looking into what you're doing. Depending on how you set it up, the transactions can be seen, right? But you can remain anonymous if you want to. That's why it's attracted criminals over the years, because they can do things anonymously, just like they can with cash. They can do things anonymously with cash. That's why they don't typically transfer through bank accounts, because it's all visible. Considering the points discussed above, it's important to explore how Bitcoin's intrinsic value is affected by its dual nature as both a commodity and a currency. It's also key to understand the dynamic of demand and supply for Bitcoin. Right, so Bitcoin is a cryptocurrency, which is a virtual currency designed to act as money and a form of payment outside the control of any one person, group, or entity, and thus removing the need for third-party involvement in financial transactions. Okay, so what is Bitcoin? Bitcoin is a cryptocurrency designed to act as money and a form of payment outside the control of any one person, group, or entity. This removes the need for a trusted third party, mint or a bank. The mints print the money, the bank holds the money. In financial transactions, it's rewarded to blockchain miners who verify transactions and can be purchased on several exchanges. Okay. Bitcoin's been around since 2009. It was invented by Satoshi Nakamoto. It has since become the most well-known cryptocurrency in the world. Its popularity has inspired the development of many other cryptocurrencies. Now, do we need to be stifled with information about how Bitcoin works in order to use it? Unfortunately, I think a lot of people think that that's what they have to do. But most of us will drive a car. Most of us will drive a motorbike, or maybe we'll jump on a train. There's a lot of things that we'll do on a day-to-day basis that we'll use that we don't necessarily understand how they work. You might drive a car, but you'll probably have no clue as to how the engine actually works. You might have no clue how the transmission works in that car, but yet you'll still use it, right? The complexities behind Bitcoin is a topic for another day. How it was designed, why it was designed. It's very tech heavy, that kind of discussion. But it doesn't mean that you need to understand all of that or have to know how to mine it to be able to use it, get it, acquire it, transact it. Now, what about Bitcoin? What if you want Bitcoin? How do you buy it? All right, there's two things I'm going to talk about here. How do you buy Bitcoin? And then where do you spend it? How do you spend it? Do you even spend it? What do you do? How to buy Bitcoin. If you don't want to mine Bitcoin, you can buy it using a cryptocurrency exchange. So there's a number of big exchanges out there: Binance, Coinbase. There's plenty of them. You just do a quick Google search. There'll be plenty of them that'll come up. Most people will be unable to purchase an entire Bitcoin because of its price. At the moment, Bitcoin's at about $60,000 US. But you can buy fractions of a Bitcoin on those exchanges in fiat currency. You want to buy $10 worth, $20 worth, $50 worth, $10 million worth. It doesn't matter. You do it via the exchanges. So yeah, for example, you can buy a Bitcoin on Coinbase by creating and funding an account using your bank account, credit card, or debit card. You just need your driver's license, some identification, and you transfer your money from your bank account to your exchange account, and you pick the coin that you want to buy. I'd hope that it's Bitcoin, but again, it's entirely up to you. A lot of people buy all kinds of different cryptocurrencies, speculating on them. Some of them are good, some of them aren't. But we're talking about Bitcoin here, which is obviously the apex cryptocurrency, been around for the longest. It's starting to receive a lot of adoption. Now, payment. Where do you spend your Bitcoin? Can you even spend Bitcoin, or is it just a big no one who accepts Bitcoin? Well, Bitcoin's accepted as a means of payment for goods and services at many merchants, retailers, and stores. Brick and mortar stores that accept cryptocurrencies will generally display a sign that says Bitcoin accepted here. This is becoming more and more common all around the world. The transactions can be handled with the requisite hardware terminal or wallet address through QR codes and touchscreen apps. Once again, if you've got a small business, very easy to set it up so that you are able to then accept Bitcoin as payment. It broadens your customer base. It allows people to purchase from you with another currency, with Bitcoin. That's another way for you to actually be able to acquire Bitcoin rather than actually buying it. And you can also get crypto debit cards so that you can load your crypto debit card up with Bitcoin. And it's like a Visa card or a MasterCard. If a retailer doesn't accept Bitcoin, then you can use your crypto debit card to tap, and it will convert your Bitcoin into fiat money and pay that person. So there's plenty of ways that it can be used. You purchase gift cards as well. You will need a cryptocurrency wallet. There's a number of wallets available. Again, very simple Google search will give you plenty of options. Some of the popular ones are Trezor. That's the one I use. I've used it for 6 years. I've got no problems with Trezor. They store plenty of coins, quick, easy to use, offline, online as well if you want. You can have hot wallets, which means that they're online and connected to the internet, and you can have cold wallets, which are offline. So basically, once those cryptocurrencies that you own are in that hardware wallet and disconnected from your computer, they can't be attacked. They can't be stolen by anyone. No one can touch them. If you buy your cryptocurrency and keep those cryptocurrencies on the exchanges, well, exchanges are like banks and they can go under. They have gone under. So you definitely don't want your funds in those exchanges for any long periods of time. Because we never know what's going to happen with centralized exchanges. So that's a great thing to know. With gold, if you're going to buy a large amount of gold, you obviously have to rely on someone else to store it for you, unless you've got a big safe that you can actually store it at your own home. But most people that invest in gold would rely on someone else to store it, which obviously requires trust. You can hold as much Bitcoin as you want on a USB size wallet, and you're given your own private keys. You just protect those keys, you don't lose them. Yes, in the early days when Bitcoin was, a few dollars a coin and not many people had much faith in it, they may have been a little careless with their private keys. I have a friend who actually bought around 400 Bitcoin the very early days. They were only a few dollars a coin. He didn't really think much was going to happen with Bitcoin, and he got a bit careless with his private keys, which is a phrase of 12 words, and he lost his phrase, and he will never get those Bitcoin back unless he's somehow able to recover that seed of 12 words. But that's how cryptocurrency works. So something that you do need to be aware of. You have to store those. You have to find a safe way to store your private keys, because if you lose those keys, it's gone. It's just like with anything. I mean, if you lose your money, if you've got fiat cash and you leave it lying around, well, someone's going to come and steal it. It's going to blow away in the wind. You've got to look after your assets. It's just the way it is. Now, the other thing I wanted to do was seeing as we're talking about fiat money, we're talking about gold, and we're talking about Bitcoin. We know in the charts that if I do a quick search here of BTC, USD, right, just go to a basic. This is the strength of, this chart represents the strength of Bitcoin to the US dollar. This chart represents the strength of Bitcoin to fiat money. So back here in 2011, the strength of Bitcoin to fiat money was quite low. Fiat, there was one stage where it was worth 1 cent. Back here in, at the very beginning in 2009, it was worth less than 1 cent for a little while. And then I believe in 2010, it actually hit 1 cent. And the same year, it hit $1. And then by 2012, it hit $12. And it's obviously started to gain strength against the dollar. And, it's been quite volatile over its short history. You can see this here. It's gone from sort of, 0 to 100, back to sort of 20, and then it went up here to 20 grand, just under 20 grand. Then it came back down again, and it was back down at $3,000. This is because it's a new technology, it's a new currency, and we still have fiat money. So these people that may have bought it in here at, $4 or $5 or $10 a coin, and then it's gone to $20,000 a coin, what do? They didn't understand it, so they sold out. And they may have had a couple hundred coins that they bought for $10, and they've gone, holy crap, the coins are worth $20,000 a coin now. I've just made a huge profit. So they sell and they cash their Bitcoin back in for fiat money, and obviously it causes the price to go down. And then time goes by, and then they decide, we'll buy some more again, and it comes back up. So it's up, and it's been quite volatile in these cycles of, as we're in the early adoption stages. You might think, we're way too late. I mean, I should have got in when it was $2 or $20, but we're still in the very, very early stages of Bitcoin. The entire market capitalization of Bitcoin is just over $1 trillion. That might sound like a lot of money, but US debt is $34 trillion. If we went up $34 trillion, if $34 trillion went into Bitcoin, this would go up 34 times. What would you have? You'd have a coin worth about $180 million, something, $18 million. So that gives you an idea of the strength of Bitcoin compared to fiat money. And likewise, if you looked at gold, XAU is gold, right? You can see that gold is also gaining strength against the US dollar. So gold's been quite strong. The US dollar has been quite weak, all right? Back here in 71, you could buy gold for $65 an ounce. And it came up here to 800, and it's came back. I mean, even gold's relatively volatile as well. But gold has come up now, and 1 ounce of gold is now worth $2,355 per ounce as of today. So gold is stronger than the dollar. Now, there's another thing that you need to be aware of, and that is that you can go XAU BTC. So you can check the strength of gold to Bitcoin. Now, this chart here is hard to even show you because it's so vast, and it's hard to fit it on one screen. But if we go back here to 2010, right, this is when, obviously Bitcoin first started trading, and they measured it against the gold price. At that very peak, at this candle here, you could buy 23,000 on the right-hand side. You can see the numbers on the side here. This is how many Bitcoin you could buy for 1 ounce of gold. So in July 2010, you could buy 23,608 Bitcoin for 1 ounce of gold. And then it got way out of hand in October 2010, where you could buy, in October 2010, 1 ounce of gold would have bought you 131,976 Bitcoin with just 1 ounce of gold. Okay. That was obviously in the very early days, but look at what's happened. I mean, the charts don't lie. This is what's happened over time. The strength of gold. Does that look good? See that when you see the red lines like this means that the price of gold is tanking compared to Bitcoin. And by 2011, you could only buy 574 Bitcoin with 1 ounce of gold. As time goes on, by March 2013, you could buy 32 Bitcoins with 1 ounce of gold. We have to keep zooming this out because the volatility is just absolutely outrageous. By 2015, you could buy 3.56 Bitcoin. You sort of get the idea. By May 2019, so I'll move that across a little. By May 2019, you could buy 0.2 Bitcoin. And today, you can buy 0.03857 Bitcoin for 1 ounce of gold, right? 1 ounce of gold will get you 0.03, whereas 14 years ago, 1 ounce of gold would have gotten you, if you had bought at the right time in the right month, 131,000 Bitcoins, right? Which would be worth something like $6 billion right now. So gold is losing strength against Bitcoin. And that is the reality, whether you like it or not. If you're more comfortable with gold, well, that's good for you. You do what you like. I'm not forcing anyone to buy anything. All this is an educational video just to show you what's going on. One of the biggest arguments I hear against Bitcoin is, can the internet crash? What happens if the internet crashes, right? Well, this little article here from CIO has some interesting things to say. I'm not going to go through the whole article, but I'm going to just have a look at, first of all, what is the internet? We know that the internet's a network of networks. Very, very difficult to actually crash the internet. Right? It's generally accepted that the internet as a network cannot crash because it's not a single network. It's a massive interconnected network of networks. It's the most powerful and intricate communication matrix ever assembled by humankind. The internet changes from minute to minute, second to second, even as different computers and other machines log in and drop out. Paul Levinson, author and professor of communication and media studies at Fordham University, has spent much of his career analysing the internet through the lens of systems theory. He says the very nature of the internet as a radically decentralized tangle of individual networks largely protects it from crashing. See, the internet, like Bitcoin, is also decentralized. Right? It would be very hard, very, very hard for the entire internet to crash based on an important systems theory principle called redundancy. There are so many backup systems, so many workarounds, so many different ways to get from point A to point B. All these come online instantly and automatically if the system fails. But this is only side 2. So clearly the story doesn't end here. All right. For the internet to experience a total global collapse or even a regional collapse based in, say, North America, some kind of agency or event would have to simultaneously disable all of the network service providers that were online at the time. All right. These guys link commercial ISPs to the internet backbone, and they're scattered all over the globe, each with multiple facilities distributed across the geographical area that the service covers. These NSPs provide the very infrastructure of the internet. If one fails, internet traffic is routed around that problem by way of thousands of other available paths. In terms of its physical components, each of these paths is made up of various hardware elements, the actual servers, cables, and equipment, but there is no way to crash the internet by disabling one piece of hardware, or even 1,000 pieces. There's no central cord to cut, no main plug to pull, to stop or even significantly slow the internet across any sizable geographic area. You'd have to do a lot of damage in a lot of different places all at the same time. So that's where a lot of people say, oh, what about an EMP, like an electromagnetic pulse? Well, first of all, If something like that happened, you wouldn't be able to access your bank account. You wouldn't be able to access your supermarket, your petrol station. Probably your electric car wouldn't work. I mean, anything electronic in your computer wouldn't work. You basically would be thrown back to the Stone Age instantly. So I think Bitcoin would be the last thing that you'd be worrying about if that kind of thing was to happen. So it would require a catastrophe, an event, a series of events, such massive physical destruction that large portions of the internet, their underlying hardware, the cables, the service, the facilities were severely damaged. Well, the good news is, it says here, right, if that's the right term, is that any global catastrophe big enough to take out all the NSPs would likely kill all life on the planet as well. These would be extinction level events like an asteroid impact or a global thermonuclear war. If we do face such an eventuality, internet access will be low on our list of immediate concerns. Yes, small disasters could certainly knock out portions of the internet. In fact, they already have, right? Look, there was a lady here who actually, in 2011, a 75-year-old woman was shoveling for shoreline copper, and she cut through a cable and took down internet access in Armenia for 5 hours. So, yes, the internet might go down. Sabotage, right? Undersea cables, that's possible. In the vicinity of undersea cables, I don't believe we've ever seen. Right? If Russia were to sever all of the Pacific coordinated strike, the move wouldn't quite crash the internet, but it would essentially isolate America and, more to that point, disrupt communications between the US. So there are some risks, but it is extraordinarily unlikely, and I think we'd be going into some kind of global chaos if that kind of thing happened anyway. And like they said here, you wouldn't be worrying too much about the internet if that was the case, and probably not your Bitcoin or your money either, because none of it would work. Maybe your gold could come into play here because you can transact with that. But if we're in a state of chaos and everyone's lost everything and no one's got any food or water, and you've got a big stack of gold bars in your safe, you wouldn't want anyone finding out about it, would you? Because I think there'd be some people chasing you down trying to get some of it as well, trying to save themselves. Maybe not. But look, again, just an educational video, trying to bring you simple, objective, and easy to understand videos about finance and money. This one was currencies, okay? The comparison between fiat money, Bitcoin, and gold, right? I'm not saying which one's better. I'm not actually telling you what I think is better. I think you know what I think is better, but you can make your own decision, make your own mind up, but it's very important that we are educated. If you thought the video was valuable, like, subscribe, put a comment below. If you disagree with me, if you think I haven't got something right, I'm totally open to what you have to say. Throw it in the comments below. Thanks once again for joining us here at Satoshi's R Us, and we'll see you next time.